The market is going haywire and the bulls are still in charge. This has paved the way for some truly interesting and high risk to reward swing trade prospects. Before getting started, here is a quick channel update. I have decided to produce shorter and more frequent technical analysis episodes in which I will deal with one stock, equity or commodity at a time. This I will do for two reasons. First of all, I have noticed that people tend to cherry pick one or two stocks from my regular bulks of technical analysis compilations. Hence, presenting 5 to 10 different ones in a single episode is merely a waste. And secondly, this will provide for faster and more accurate analysis, as a short update may take no more than a day to produce as opposed to a full week for the extensive compilations. Here are some interesting trading prospects, some of which I have already positioned myself in. But before exploring them, do note that nothing in this episode is financial advice. And if you like what I do and if this channel helps you improve on your trading, then please like and subscribe. Each minute takes about 2 hours to write, shoot, edit and produce. Mainly because I procrastinate and play a lot of canasta, but that'll be our little secret. Some of the analysis in this episode will be quite brief. For some companies have simpler technicals that just don't require our going too deep in order to find an edge. For sometimes simplicity is all we need. But before getting into each individual equity, I'd like to have a quick look at the index. For the index is key to swing trading, and every serious trader ought to always keep a close eye on the bigger picture. At the moment, the index is at a make it or break it level, at least in the short to mid-term. It has struggled to break above the 1800 level and is, as of producing this episode, hovering around in a rising wedge. Technically, most of those get their outbreaks to the downside, and whatever direction it eventually chooses will be of utter importance to knowing whether to scale up or down on one's swing positions. On top of that, we also need to look out for false outbreaks that reverse. If we get such, expect prices to move violently in the other direction. One thing that slightly worries me on the index is its weak RSI and how it has time and again struggled to break above the upper bearish blue line on the daily. The big question though, if we were to get a break to the downside, is whether that break would be an actual reversal or just a correction. We currently see a good support at 1680 to 1690 with the EMA 200, Fib 236, a horizontal support and the green Ichimoku cloud on the daily. Do bear in mind, however, that if we were to be in the midst of any kind of formation creation, such technical support cluster might very well be completely disregarded, just as we saw from the March bottom until now. My confusion at the moment is that most of my swing prospects show a lot of strength, whereas the index doesn't necessarily do so. Or rather, the index shows clear signs of a possible reversal, whether that will just be a correction. But at the moment I am pretty heavily invested and don't wish for obvious reasons to see the entire market tank. Let's get into the prospects and see what technicals that support them. The companies that we'll go through are Cell Impact, Evolution Gaming, Kancera, Quickbit, Sivers, Starvolt and Swedbank. Cell Impact is an interesting one. As mentioned in a previous technical episode, I did give the stock a couple of tries, both of which got stopped out. I then set a reminder to reassess the stock at the key support at 25 kroner. And as the stock still looked technically strong with its gradually higher lows and strong RSI on the weekly, I decided to give it a go. The only issue, or mistake perhaps, was that the stock is trading within a declining channel. And as we know, any diagonal movements or formation creations tend to utterly don't give an F about horizontal support levels. Neither did it here, and I quickly found myself some 18 to 20% in the hole. Luckily though, as the price bounced at the EMA 200 during a false downwards outbreak at heavy trading volumes on the daily, the stock rapidly shot up some 28% in a single day due to a bullish sell order. As of now, I don't really expect any miracles and will release my position once it nears the upper level of the channel at around 30 kroner. After that, I will only re-enter again if the price manages to leave this bearish pipe. If it does, and if it breaks above the previous resistance at 31.90, we might very well expect a retest of the previous high at 42.50. In the midterm, as in the upcoming year or so, the stock does indeed show a lot of technical strength. However, if the stock were to break below the previous pivot bottom at around 17 kroner, that party might very well be over for now. On an isolated bullish note though, the RSI did make a clear touch on the lower bullish red RSI line, upon which I will hold tight onto this swing for the time being, or until proven wrong. There are a lot of people who have made solid profits from this company, and to those of you, congratulations. Although this might be it for now, at least temporarily, but do note that I say might. I've noticed that people strongly dislike when others take positions against their stocks, as if being on the market is all about cheering and rooting for a company as opposed to making money. The reason why I'm turning bearish in Evo is because the price just broke a short-term trend line at heavy trading volumes. Add to the mix a 5-month-long RSI divergence on the daily, and where it finished off with issues at breaking above the upper bearish blue line. And finally, the stock is in the midst of forming a head and shoulders pattern with a diagonal neckline. Given the full technical map at hand, I will take a short upon a breakout from this head and shoulders, but not before, for trading experience has taught me the expensive way never to front run a formation, as a failed head and shoulders may very well shoot up rapidly and either take out a new high or simply begin forming a symmetrical triangle instead. Front running is an expensive hobby that I might indulge in when I'm old and rich, but until then, I don't think so. Having said that, the technical target upon a head and shoulders breakout is at around 480 kroner. Here's an interesting overall prospect for any swing trader to keep an eye on. In 2013, it made a 1900% move over the course of 2 months. This stock has got Starvolt vibes written all over it, but with the added benefit of higher trading volumes, which facilitates moving in and out with bigger positions without affecting the stock price too much. Since the double bottom in March, we have seen a 1000% peak in price. What makes this move extra appealing is its heavy trading volumes, which provide for a possible persistency in further price movements. This singular move is very similar to that of Starvolt's. Now, during this rally, Cancera's price peaked at the 4 kroner resistance. This move also put the weekly RSI back into its bullish red channel again after 6 years of death by 1,000 days, at which the price sluggishly dropped by 96% and with hardly any exciting retracements on the way. This, combined with its extensive moves, is what makes this company a prime swing trade candidate. For as we can see, once it trends, it stays with that trend. It doesn't muck about, at least not historically. Technically, Kancera has a good support level at around 290, which is also held up by the EMA 200 on the hourly as well as the 0.5 fib. I particularly like this retest of the previous local high at this very level after having been served some weird soup bowl with an adhering ladle. This is where I entered a swing position, as I have reason to believe this retracement was nothing but a power amassing correction. We also see this by the greatly declining RSI on the daily, and all the while staying in a strong bullish territory. And as mentioned in detail in the RSI trilogy, any RSI that stays above the green or above the upper bearish blue are often signs of strong upwards movements to follow. On a final Kancera note, we currently have a 4-way Elliott count, which of course paves the way for a final move before being done for now. My best prediction here is that we in fact stand a good chance at reaching the 5 to 5.20 kroner mark, which constitutes a resistance area that coincides with the fib 618. Normally, technical targets are fairly easy to set, but in this case I find myself aiming a bit in the dark. Regardless of what, I will release my position should we reach this very level. To anyone who might be new to this channel, Quickbit is the company in which I was all in for some time. This was when the technicals still were strong and the hype was well alive. After that, the company seems to have resorted into some kind of muteness. Once the technicals turned dull, I exit my entire position at the retest of the 1080 resistance. That money was put to much better use in other companies, Starvolt being the prime one. But now, Quickbit seems to have risen from the dead and has begun to show some strong technical signs again.
It's alive! It's alive! It's alive!
This seems to be a recurrent phenomenon in this episode, but I again missed out on the clear bullish red signal recently. Because so far each clear lower bullish red touch has come with great profits in Quickbit. Plus 93% in 2 months after the September signal last year, plus 62% in 2 weeks in April this year, plus 25% in 2 weeks in July, and so far plus 32% in a week from the signal in August. And again, for those of you who haven't watched it yet, I strongly urge you to watch the RSI trilogy, at least if you want to take your trading to the next level. A viewer even reached out to me the other day and announced that he had bought himself a swing position upon that clear touch. Congratulations, well spotted and well done. Apart from the clear lower bullish red RSI touch, which to any attentive trader gave you another ideal entry spot, Quickbit is trading at higher lows and has just broken out of its year-long descending triangle at heavy trading volumes. Given that the company's fundamentals are solid and strong, this might very well be the beginning of a steep move to the upside. I personally bought my position at 1120 for a total of 18% of my portfolio value. The key critical level from now on is the 850 support. If this gets broken and we get a new local low, this might turn into quite a drearisome sequel. However, I don't think that poses too much of a threat at the moment. As it stands, I will sell off 15% at the previous local high at 1350, another 25% at 1440, and the remaining 60% I will free roll with, at least to the previous high at around 20 kroner. And despite selling off on its potential way up, it doesn't mean I won't re-enter with that same position if the technicals show tendencies of continuation patterns. This is a company I sure wish I'd found earlier, however I'm not going to get too deep into this one. It sure looks incredibly strong technically. The stock is, or rather was, clearly in a strong consolidation phase with a super strong RSI channel on the daily. I did scrutinize it at the 89 kronor level, although I didn't want to enter before the gap had been filled. Tough on me, for since the price has taken off by 10%. I might position myself for a swing long should we take out the previous top at 104 kroner. This is a very interesting one. Framgångsjakten asked me to take a look at it technically when it was trading at 10 kroner as he had taken a position himself. But being born an idiot, I disregarded it completely as I didn't see any outstanding potentials in it.
Because I'm an idiot! Happy?
A few days later, it took off by 200% in just a couple of weeks. On the bright side, however, it does show clear signs of consolidating as the price moves in a bull flag, and all the while the RSI recharges in strong bullish territory. Counter to what I just said about awaiting a technical outbreak, my only real issue is whether I actually should position myself already due to its clear signs, or if I should await an outbreak at 30 kroner. The only risk by doing so is that the stock may open with a big gap, which of course could be greatly disadvantageous for any swing position. Although as any success with this company would leave us in uncharted territory, setting targets is a difficult thing to do. And given that we are currently so far off from the previous price action, the use of Fibonacci clusters simply doesn't apply. I guess I just have to be a good sport and stick with it until the technicals reverse. And on a fun note, we did get a clear lower bullish red signal during the March bottom, one which would have generated a 440% peak profit. My one and only concern with Sivers, whatever it's called, is its very high RSI levels on the weekly. In that sense, some sort of a steep retracement from here might be a sign of health before proceeding higher. On the flip side, however, it would leave me somewhat in the dark and I would need to reassess the entire stock prior to any entry. I'm not going to talk too much about this one at all, as I'll go through it in detail in a soon-to-come episode. But to put it frankly, this ride up to 93 was nothing but FOMO, and we can expect to see a lot of sad and moping bag holders who bought on its parabolic ride up to the top. The RSI on the weekly peaked at a staggering 94, which is nothing short of ridiculous and a core example of what happens when herd emotions set in. Expect a dire correction to occur, and don't be surprised if it will be in the minus 70% range or higher. Anyone who follows my channel would know better from my frequent warnings than to buy in at these stupid levels. For that's exactly what those levels are. Stupid. Unless losing money is a passion to folks out there, that is. And finally this one. Swedbank. Given that I'm bearish on banks in general, I always keep an eye open to short them. And as mentioned in detail in Banks, the King Must Die episode, Swedbank is the best shorting candidate for reasons disclosed in full in that analysis. In this very case, we have a technically confirmed declining channel on the weekly chart with 3 touches on the lower side and 3 touches on the upper side. And as the third touch on the upper side also happened to coincide with a horizontal support level, I decided to take a leverage short. The leverage is small, 2.5 if I'm not mistaken, and my short position doesn't amount to more than 4% of my portfolio value. I set a tight stop loss as a break above the horizontal support, and a breakout from the channel would change the technical landscape altogether. My first technical target is 134.50 and my second one at 122, after which I will free roll with the remaining third, or alternatively sell it all if we were to test the downside of the channel. That was all for now, thank you and goodbye.